They call NIO the Tesla of China, and if you look at the monthly chart, price action, you would say it's definitely not the Tesla of China, as price finds itself pretty much returning 100% from this huge up move that began in May of 2020. Now, the good thing is that price can't go much lower. I mean, it can go lower, but not much lower. The bad news is I don't see price moving up quickly anytime soon. Why? Just because the sentiment out there in the EV space is bad, and you can just look at Tesla as an example. But in this case, we're going to look at this article, and it is coming from Investor Place. So bullish coverage of NIO only seems to be increasing. The Chinese EV producers falling out of favor with Wall Street, an alarming pace as shares continue to decline. Most recently, analyst Eunice of AB Bernstein reiterated hold rating for NIO stock and lowered her price target to $5.50. It's true that NIO recently reported weaker than expected earnings for the fourth quarter of 2024, but experts seem convinced that the company's problems run deeper than failing to meet expectations. Several analysts have slashed their price targets on NIO stock during the past week. So you had another analyst at Barclays recently issued a $5 price prediction maintaining an equal weight rating. You had another analyst at Goldman Sachs. They maintain a hold rating and lowered their price target to $7.40. Now, things didn't always look so grim for NIO. It's not hard to remember the days when experts touted it as a likely winner of the booming Chinese EV market. But NIO stock has spent the past year progressively trending downward as its weak fundamentals scare away prospective investors. Now, things only seem to be getting worse as problems with the growth strategy are creating new levels of uncertainty. And one of those uncertainties is pretty much China's economy has never really recovered fully from the pandemic. And right now they're having a lot of real estate woes, which is affecting the entire economy and other sectors within the Chinese markets. All right, so this is the weekly chart, and if I was to just draw a trend line down from this origin of this leg down, which took out the pivot low established in May of last year, I would say you can't even think about getting bullish until you get a candle close above this downtrend line. Confirmation that you're looking for, you want to see a bullish crossover between the 13 and the 26 simple weekly moving average. Now this is what you do want to see. You want to see some type of hammer candle, but you want to see volume, above average volume, kind of like what you had back in 2020. All right, so let's scroll down to the daily chart. Now this was the last defensive stance from the bulls. As you can see, price kind of hovered above this support line at $7 for quite some time until the sellers eventually took control. Now what you can say is that the momentum to the downside is waning. Yes, you do have lower lows, but you have lower highs on the RSI, so that's indication that, again, the momentum down has slowed. However, if you look at all your moving averages, they're still pointing down, which is not good. So what would I do if I was interested in getting long NIO? Well, I would not get long now, or you can DCA, dollar cost average, or you can scale in, or you can wait for more confirmation, kind of like what we had back in 2020. You can see that a bit better on the weekly chart. We had this W pattern, and pretty much the break out from the apex was an opportunity to go long. And right now, the price action tells me that we have reached the bottom. We could go lower, but I'm looking for some type of double bottom and a move higher to confirm that price wants to go higher. Thanks for watching. Subscribe. Please like the video.